Hey everyone, welcome back to the channel. Today I thought I'd do a video talking about my current portfolio allocation, so let's get right into it. So as you can see, my current biggest position right now is AMD. Now if you haven't already, you can check out the last video I made. I did a deep dive into AMD and all my price targets for it, but basically I think this is a medium risk, medium reward stock. I think it can 3 to 5x in the next 5 years, so it's a large percentage of my portfolio. I'm really betting on the AI momentum to continue with AMD building strong GPU and data center chip growth. And most of my purchases came around the $110 to $120 range, so it's currently trading quite a bit below where I bought, but I've decided not to average down too much because my portfolio allocation is already pretty high, and I think whether I have an average price of $90 or $110, with the long-term price targets I have, I should be making money either way. Now, my next biggest position is Google at 18% portfolio allocation. Now, we all know Google for their search business and YouTube, but I think most of the growth for this company is going to come from their cloud business. It's growing super strong, and they're starting to compete with the likes of Amazon and Microsoft. I think the concerns also with the search business are overdone. I mentioned it in a previous video where I talked about 4 stocks I'm buying. And then you obviously get the Waymo call, which I call it, because I think it's completely overlooked by the market, but it's a piece of Google's business. And if the company becomes successful, I think the valuation of Waymo is going to take a strong part in Google's valuation. Looking at the chart, this one's currently right around where I've been accumulating. I would continue on any small dips, and yeah, I'm currently buying it and adding to this position. So the next biggest stock in my portfolio is Nike at 14% portfolio allocation. Now, this brand is what I believe to be one of the strongest retailers in the world. I think they have the strongest balance sheet to get through a recession if there was ever one, and even to navigate through the tariff situation. And deals are currently being discussed right now with Vietnam and Cambodia, so I think they'll be able to get out of this situation looking better than ever. And I think long term, this could be like buying Meta under $100. It's really a world-class company that you're getting at a huge discount. This one is also currently trading slightly under where I started buying, in the $60 to $70 range. And I'm currently not adding to this position because I think I'm comfortable with the amount of shares I have, with the percentage it takes up in my portfolio. And I think it'll rebound soon. So now equally weighted at 14% is none other than Amazon, another incredibly strong company. Right now, they're trading at their lowest P in history. AWS is growing really fast. It's still growing in the double digits. And I think they have years of operating leverage to expand those profits for years to come. And they even have talks right now of acquiring TikTok, which would, I think, really boost the stock and open up a whole new market of advertising to them. Amazon's currently down 30% from its all-time highs. I think in this zone, it's definitely a buy. I'm adding on any further dips. This is a huge volume shelf that it hit in 2020. It hits $170, so same price it was almost over 5 years ago now. So really good deal right now on Amazon. Next up in my portfolio at 13% is the Qs, the NASDAQ ETF, for those that don't know. And this one I kind of use as a bankroll, I want to say. So whenever there's big dips in the market, I know that the Qs are going to be falling less than some of these individual stocks. So if I see a really good deal, I can sell out of the Qs, use some of that cash, and purchase some of those more beaten down individual stocks. And some may ask why Qs instead of the SPY, and my answer to that would be that I'm just more risk averse currently, and tech stocks in general are more attractive to me. I think that they continue to be the future and will be for many years to come, so that's why I chose the Qs over the SPY index. Next up at 7% allocation is the king of all assets, good old cash. Now I currently hold just a little over 7% of it, and it's yielding 4 to 5% depending on the savings accounts. and it's just ready to be deployed if we continue to dip further. Right now we're bouncing a little in markets, so I'm waiting for another 5 to 10% drop in the indexes to keep deploying some of the cash that I have on the sidelines. Next up is HIMS at 5% allocation. This is one of my smallest positions. I made a video recently on my bullish thesis and some of my price targets on the stock. This is definitely a high risk, high reward play. For me, it's a fast growing telehealth brand that's targeting underserved millennials, and I think it can really pay off if the management team executes on some of their promises. They're expanding into weight loss, mental health, and personalized medicine right now, and they have a really strong subscription-based recurring revenue model that we all know Wall Street loves. Since the last video I did on HIMS, I talked about this $24 level being extremely critical, and ever since it's still trading above it, holding tightly around the $27 to $24 range. I think this is a great time to be accumulating shares before the next leg up. And last but not least, this is a position that I just recently started here a few days ago with Meta at 4% allocation. Looking at the chart, they have 50% upside just to get back to all-time highs. So just that is super interesting from a value perspective. And we all know they're a cash cow ad business with Instagram and Facebook. And there's the potential that they might even start paying dividends soon. So I think this is just a really good value bet. So those are all the stocks that I currently hold in my portfolio. I think I'll do one of these update videos every month or two. And in terms of stocks that are currently on my watch list, there's really one main one, and that is Robinhood. I think it's a really innovative company that's going to do super well in the financial sector. And I don't really have any exposure to financials at the moment. But I'm holding out, waiting for the $30 range. I'd really like to get Hood under $30. That would be an ideal starting position to start my allocation into Hood. And just before I end the video, I thought I'd give you guys a little market update and where I see things going in the next week. We have a big set of earnings coming up. On Tuesday, we have Tesla. On Wednesday, there's Chipotle, Boeing Airlines. On Thursday, we have Google with their earnings. And Friday, it's a little calmer. But on Thursday, we're also going to have the GDP revision, which is expected to come in negative. So it's going to be a very volatile week. Be ready, be prepared. If there's any major dips, hopefully you guys can average down in some of your favorite stocks. And if the companies you hold right now are presenting earnings, I hope they go really well. So I hope you guys liked that video. Let me know what you guys are holding in your portfolios. If you could subscribe, that'd be greatly appreciated. Drop a like on the video. We're trying to reach 100 subscribers right now. And have a great rest of your weekend.